Welcome. My name is Joseph Anderson, and today I'll be discussing how to sync orders to QuickBooks. This demonstration will talk about whether you should sync individual versus a summary order, whether you should add merchant fees to sales, and what types of orders should you sync, such as a sales receipt versus an invoice. So a little bit about me. I'm the CEO and founder of Sync with Connex, and I've been working with QuickBooks for over 12 years. I created the Connex for QuickBooks in 2011, and I've helped set up hundreds of companies with QuickBooks Online and Desktop, and I'm also the principal software developer of the Connex software. So our first question of the day is, what type of orders should I create? Sales receipts are the most common type of order because most of our customers process credit card sales. It's a default setting for customers to make it super easy. And thinking of sales receipts, like going to the grocery store, you buy a gallon of milk and a loaf of bread, and you get that receipt from the cashier. It's money that you've already received. It's been paid for. In the case of a credit card sale, it's going to go into a receivables and asset account, a folder, and it's going to sit there until you get the deposit and you perform your matching. There's also invoices and payments, and those are great if you get orders on terms. So your electric company, they send you an invoice, you pay them in 15 or 30 days. It's also good if maybe you take a deposit for an order. So let's say you have an order for a computer and you get a $100 deposit, and then you send it to them and you get the other $900. So you could have an invoice with multiple payments. Invoices and payments are good for subscription plans, such as a recurring service for maybe consulting, where you get $100 a month every month for 10 months. An installment would also fit. Some of our customers will actually choose unpaid invoices instead of sales receipts, and the funds will go into your AR account and you can do a journal entry to move them out. However, most customers choose the sales receipts for that particular type of payment method. Sales orders are great if you drop ship. When I work with customers with sales orders, I give the example of my desk. I purchased it at a furniture store. The company sent the purchase order, which is a document that says I need to order something from a vendor, and it's shared between the seller and one of their suppliers, and says, okay, go build Joe's desk. It was built by a group of Amish furniture makers in Ohio. So they sent it out and they said, okay, and the vendor says it's going to take us 6 weeks to build this desk by hand. So I put a $100 deposit down on the desk. The furniture builder came out and put it together and shipped it out. It took about 6 weeks. And when they received it and I got it at my home, I paid off the rest of the invoice. Now, from a sales order in QuickBooks, there's a button to create a purchase order and to create an invoice payment. So it's good when you don't have the inventory at this time. And other than estimates, which I'm not going to cover in this demonstration because they're not really a financial transaction, no money has left your company, they don't affect your inventory. We have some customers who create the sales order first, fulfill the order, and then close it with an invoice and payment. That's great if you don't have a deposit. So maybe if I purchased a desk, I said, sure, I'll just pay you when I get it. And then when they get the desk at the furniture store, they give me the invoice, okay, you owe us the money for your desk, and I paid it off. This can be set up if you select multiple order statuses. So let's say you say sync orders when they're paid and then sync them again when they're fulfilled. So the same order would come back twice, but it would say that, oh, the sales order already exists, but the invoice doesn't, and it would make the invoice. You could set up a rule in our software to say, unless the order shipped, then don't make the invoice. So here's a quick example with Shopify and syncing sales. In this case, I'm actually going to do an invoice, but I could have done a sales receipt as well. I run my web connector tool, and I use this testing application. It's not actually Shopify. And I let it run. And you see here that I synced a basic order to QuickBooks. So many customers ask me, should I add Amazon or merchant fees to individual sales? The answer to that question is that there's no need to add $1 or $2 to every sale. You'll have hundreds of journal entries in QuickBooks for no reason. In my opinion, there's two reasons why you add the fees. One, you're having like a summary sale. So let's say you do the Amazon settlement. When when that order comes in and you see the deposit from Amazon on your bank account, and I'm going to show you that in just a moment, you're going to check a box and say the sales receipt with the fees matches exactly, and that makes sense. And for Amazon, we'll actually break out the fees for you into warehouse loss, other, FBA, advertising. So it's a good match. Now you could also easily enter the fees, into undeposited funds or your journal entry in any way you want, but it's a good place to add your fees. If you're doing the daily Amazon summary, or in our case, we do a daily summary of sales from PayPal from our store, I also add the PayPal fees onto my sale so that when I go into my bank account, it says, oh, I have a deposit for X dollars. This sales receipt matches the X dollars. I click a button and it matches for me. So like I said before, really with your Amazon fees, I mean, we in this case, we actually break them out into separate categories. There's no need to add them to individual orders. You can't take Amazon sales from our tool individually. The same with eBay and other channels that send us fees. Most of them don't accept Amazon and eBay. And for those particular systems, we don't break out the fees by, all right, is a $3 fee, $1.50 is for, a shipping fee, and this dollar is for your advertising fee, and this 50 cents is for a restocking fee. It would just be one straight fee. It's pretty simple to set up the fees in our software. You just enter the name of the fees, like merchant fees, where it's going to go. But if you wanted something more granular during deposit matching, you can just enter, all right, I got a $1,000 deposit, there were $1,200 in sales, this 50 is my advertising, the other 150 is for my seller fees. Now, many companies ask me, how should I match deposits? Now, if you have your orders in an undeposited funds account, I mean, you could have thousands and thousands of orders. And undeposited funds is this big, just like checkbox list of checking off hundreds of orders. So if you got one payment processor and you're doing this every day, like our company, we have one summary sale, so we have 7 summary sales a week. Undeposited funds is fine. Great for one payment processor. You go into your bank feed, you just check it off. You don't even have to go into undeposited funds. But where things are going to get tricky is if you have hundreds and hundreds of orders, you have to go into your bank account, this is for QBO, and click Find Match and check off a bunch of orders. And that can be really troublesome if you're missing sales especially. And I'm not a big fan of using undeposited funds when you have tons of orders. Now in this particular example, you see that I just have one summary sale. You see here that I found a sales receipt from this particular date for the 6183.05, and I just checked it off. Now, if you got multiple payment methods like Amazon and PayPal and Stripe, you can deposit the funds into asset accounts. And so what will happen is you could think of QuickBooks as a folder for files. And you could have one folder for your Amazon and one folder for your PayPal and one folder for your Stripe. And your last folder is for your bank account. And all of your sales for Amazon will go in one, for PayPal in the other, and your Stripe in the other folder. And when you do your deposit matching, you'll just pull orders, pieces of paper out of these folders into your bank account to match. So this is just an example of me with PayPal, merchant account fees, and how I would process the refunds. I just subtract them out and it comes out to the deposit using the journal entry. This is ideal if you have hundreds of sales, and it's used by a lot of the accountants that work with our software. A lot of customers ask me about, should I be syncing summary or individual sales? I don't like individual sales. QuickBooks is not a CRM tool, shouldn't be used as one. There's Salesforce. We use Entreport for our CRM. In my opinion, CRM is great for your email marketing. You don't want to use QuickBooks unless it's some sort of financial transaction. You don't need 40 different orders that say that you ordered one widget. You can have one sale with 40 widgets on it. The IRS doesn't care how much money you had on June 1st. They care about how much money you made as of 12/31, the end of the year. Now, my opinion about a summary is if you can wait a day or wait 2 weeks, in the case of the Amazon summary report, then you should do a summary sale. I think if you have more than 100 or 200 orders a day, you should be on the summary. QuickBooks performs much better with as few customers and as few orders as possible. I've seen QuickBooks desktop company files hit 2 gigabytes in size and they are slow as a crawl. They just don't simply work. I'm not a fan of having tons of individual customers and individual orders in a system, especially when they're completely unnecessary. I mean, if you're selling to customers all the time, such as like a vendor, then I think it's great to have an order history in there. But if it's like a one-off Amazon, if you sell like B2C, I wouldn't even bother putting individual sales into your QuickBooks. If you're a really large company and you're doing this for inventory tracking, there's third-party inventory management solutions that you could use to keep all your systems up to date with the right stock, and you could do some journal entries to keep the value of your inventory asset. So here's an example of an Amazon summary, and these are my favorite. You see here that we broke out your FBA fees, your waste disposal, as well as put on a couple of items. The other idea that I have is kind of a hybrid where you have one customer called, let's say, summary orders, and then beneath that you have all of your orders. So summary orders will have a couple hundred orders under it, but when you double click an order in summary orders, you'll see the actual details of the sale. Again, this is a way to limit on your number of customers, as well as keep QuickBooks, extend the life of your QuickBooks. Many customers ask me, how should I map order numbers between my website and QuickBooks? I recommend using the next number from QuickBooks because it's auto-generated and there's a guarantee that no numbers will overlap. But if you have just one selling channel and you're careful, you can just map the order number from your website to QuickBooks. You can also use Connex to apply a prefix, such as S for your Shopify sales, A for Amazon, and etc. The benefit of the next QuickBooks number is that it's auto-generated and it increments by 1. It's great for multiple selling channels because you can make sure that your Amazon sales don't overlap with your Shopify order numbers. A common problem customers have is they'll have 2 Shopify sites. They both start at order number 1. You sync and you have a number overlap because order 1 already came through site A. Now, the order number won't just disappear. It'll be placed into the memo field. But you can use our rules engine to map it to other areas such as reference number, PO number, even the QuickBooks Other field if you wish. If you just sell on one channel and you don't hand enter any orders, you can map the order number to the QuickBooks Order Number field. There's no additional settings required. But if you're entering manual sales, just make sure that you use different numbers because if Shopify syncs order 10 to QuickBooks and you go to add a new order, it's going to try to sync order 11. Overlapping can cause sync failures. Another solution is to apply a prefix such as S for your Shopify sales or Web for your online orders. You can apply a prefix or suffix to your sales under the Advanced Transaction area of our Configure page. You could also add a rule to say if the selling channel is X, then the prefix is FBA. Many customers ask me, should I sync historically? And the answer almost all the time is no. One of the main problems with syncing historically is that your inventory will drop. Every time an order syncs, your inventory is decremented by the number of items on the order. That would mean you'd have to perform an inventory adjustment in QuickBooks, which is you list a bunch of your products and you list the proper stock levels. Furthermore, the value of inventory would be incorrect and you would have no cost of goods sold. Now, if products are missing in QuickBooks and you ask Connex to create them, we sync no initial stock level. So if your product has 15 quantity on Shopify, when we create it in QuickBooks, it's going to say 0. And the reason why we do that is that we don't know the value of that inventory. How much was the cost of those 15 basketballs? So we have to add it in as 0. If we added it in with a quantity of 15 and you sold them, QuickBooks would be unable to track your cost of goods sold because there was no purchase information in QuickBooks. If you need to sync historically, talk to your accountant about an opening balance. This will summarize your sales and value of inventory at a certain point. There's no need to sync hundreds or even thousands of orders from 1, 2, 3 years ago into your QuickBooks. Connex is built as a sync from date of install forward solution. Should I sync orders from my shipping software or should I sync orders from my WooCommerce or Shopify directly? There's a lot of benefits to syncing from your shipping solution, and there's a lot of benefits from syncing with your website directly. One of the main benefits of syncing with your site is that we pull the refunds and you can sync your stock changes from QuickBooks. One of the benefits of syncing with your shipping solution such as ShipStation is that some of your selling channels that are on ShipStation may not be compatible with Connex, but they're in ShipStation, so you can use them as an intermediary. Plus, it's a lot easier to sync with ShipStation because as you add selling channels, you add another Shopify, you add another WooCommerce, there's no need to reinstall Connex every single time. So if you want to sync with your WooCommerce directly, you'd have to log into our software and add another connection and go through the installation wizard. But with ShipStation, you add it in there and it's a once and done scenario. The main problem with syncing through ShipStation or through most shipping solutions is that we can't take a stock change from your QuickBooks, send it through ShipStation, and then ShipStation sends it out. So you would need a third-party solution to manage your inventory. Now, if you do choose to sync your website directly and sync with your shipping tool, you can log into our software, and on our configure page, you can choose a list of selling channels. So if you're doing a two-way sync with Shopify, there's no need to sync those same Shopify orders through your ShipStation. Another issue that I've seen with syncing through a lot of shipping solutions is that they may not pull all of the information. They may not pull your payment method, they may not pull some of your custom fields, but that's done on a case-by-case basis. I can tell you that if you sync with your website, you're getting almost everything that you can see on the screen from your order, and it's a more fine-tuned solution. Even as I've worked with inventory management tools, shipping tools, they pull what they need because they're a shipping tool, they're an inventory tool. They're not thinking of business from an e-commerce accounting perspective. So let's go over a brief summary of what we've learned today. I recommend using sales receipts for your credit card sales, invoices for your terms, and sales orders for your drop shipments. Sales receipts are the default mode of Connex and recommended for most credit card transactions. If you are syncing a large volume of sales a day, 100, 200, I consider the summary sale. QuickBooks does much better with a smaller number of customers and orders, and it will extend the life of your QuickBooks long term. I have seen files of 1, 2, 3 gigabytes. QuickBooks starts to slow down, and it's not built to handle thousands and thousands of customers and orders. It shouldn't be used as a CRM tool. If you do have to sync individual orders, at best place them under a single customer like Amazon Sales. I'm really not a fan of having individual customers in QuickBooks unless you do continued business with them. You can also take your orders when you sync them from your website to your QuickBooks and separate them into different folders or accounts. So have a folder for your Amazon sales, a folder for your Stripe sales, so that when Stripe sends you a deposit into your bank account, you can just pull money out of the Stripe receivables folder and put them into your bank account. A common problem people have is they put all the sales into the bank account, the check register, but your check register is not going to have order 1, 2, 3, 4, 5 in it. It's just going to have your deposit of $2,000, $3,000, $4,000. So you want to make sure that your check register and your QuickBooks are identical. Now, if you just have a single payment method like PayPal or Stripe, undeposited funds is great. You just check off all the sales that match it and you're good to go. Connex even has a deposit matching tool where it will do all the deposit matching for you, so you don't need to check off a bunch of sales. We have that available for Shopify at this time. So if you're still experiencing sync issues, how do you contact us? Well, if you visit us at help.sync.withconnex.com, you can click Submit a Ticket on the top right, and we're happy to answer any questions that you may have. And so that'll end my demonstration for today. Feel free to reach out if you need anything. Thanks.